controller at Factory Cleaning Equipment. If you're a business owner, please do yourself a favor and take the time to do year-end tax planning. Planning before December 31st will allow you to take advantage of the generous tax law changes that have happened in the past couple of years. These tax law changes were put into effect to stimulate the economy by giving businesses more money to spend on growth and more money to reinvest in their company. One of the best deductions that resulted from the 2017 Stimulus Act are the generous Section 179 and bonus depreciation rules. I will be talking about these rules and how they relate to your company assets. Capital assets are the property and equipment that a company buys for long-term use in its day-to-day operations. Rather than writing off these assets in the year that they are purchased, the IRS requires companies to depreciate these assets over their useful life. For example, a standard piece of equipment like a floor scrubber is usually depreciated over 7 years. If a company buys a capital asset in 2019, the IRS allows the company to write off the full cost of the asset in 2019 if the company follows certain rules. These depreciation rules are called Section 179 and bonus depreciation. They have similarities and differences. How much did you spend on company assets in 2019? The Section 179 deduction limit in 2019 is $1 million. Asset purchases must be under $2.5 million to qualify for the $1 million deduction. Assets purchased greater than $2.5 million will reduce the deduction. Now a business can take $1 million in expense directly against net income versus the old depreciation rules where a company would have to take that deduction over 7 years. Smaller businesses, S-corps and LLCs, would benefit directly from this tax deduction. The Section 179 would reduce their taxable income by the amount of the deduction or the cost of the equipment. Section 179 can only be used to offset business income. It cannot push a company into a net operating loss. Section 179 can be carried into future tax years if not used in the current year. Bonus depreciation. You can also use bonus depreciation on new and used equipment. In previous years, it was limited to new equipment. Bonus depreciation can push the taxpayer into a net operating loss. A net operating loss would mean no tax liability at all. It can also be used with Section 179 depreciation in combination. Let me give you an example. If a company bought a $10,000 asset and they had $150,000 in taxable income from their business, here is an example of the tax savings. They would be able to take a $10,000 deduction for Section 179 for the equipment that they bought. The tax savings would be $3,500. So if you take that $3,500 from the cost of the equipment, the actual cost of the equipment is $6,500, not the original $10,000. The qualifying equipment must be used for business purposes for more than 50% of the time to qualify for the deduction. Again, to qualify for your 2019 tax return, your equipment must be financed or purchased and put into service between January 1st, 2019 and December 31st, 2019. With leasing or financing equipment, you can take the Section 179 deduction for the full amount of the equipment without paying the full amount in 2019. The amount you save in taxes can actually exceed the payments, making this a very good deduction. Let's take this a step farther. Companies can take a Section 179 deduction on equipment that they lease or finance in the year they purchase the equipment. Let's go back to our first example. Your company buys a piece of equipment for $10,000 but finances the equipment. You just bought it and have made two $200 payments in 2019. Because you purchased the equipment and it is in use, of course more than 50% business use, you are able to take a $10,000 deduction in 2019, even though your cash outlay is only $400. The main benefit of a non-tax capital lease is that you can still take full advantage of Section 179 deduction, yet make smaller payments. With a non-tax capital lease, you can acquire and write off up to the deduction limit worth of equipment this year without actually spending that amount in 2019. So now is the time to take advantage of tax planning and Section 179 and bonus depreciation.